Last Friday was the largest Bitcoin flash crash in history. $278 billion in value was wiped out in just 45 minutes. To put that into context, that's almost 4 times larger than the pandemic crash in March of 2020, which erased $74 billion from Bitcoin's market cap. So what caused it? On Friday, Donald Trump declared a trade war on China, announcing a 100% tariff on all imports, bringing total tariffs on most Chinese goods entering the U.S. to 130%. Markets panicked, and of course, in moments like these, correlations shoot to 1, and everything sells off in a dash for cash. But the one key difference this time around was that Bitcoin was the only market open, as it trades 24/7. So as traders scrambled for liquidity and sold their Bitcoin, automated stop losses and leveraged positions began to cascade. The result was a chain reaction of liquidations, and in total, $19 billion in long positions were liquidated across the broader crypto market, but only $5.8 billion of that came from Bitcoin itself. And that's a crucial distinction. Bitcoin represents about 60% of the total crypto market, meaning that it was only 30% of the liquidations, meaning it's underrepresented. Translation is that this wasn't Bitcoin blowing up, largely it was the casino. You could think of this as a controlled burn. The leverage was cleaned out, the excess, the froth that had built up over months, and what's left now is a much cleaner, more spot-driven market. And by today, Bitcoin has already recovered 12%, climbing back to within 10% of a brand new all-time high. The same can't be said for the rest of the so-called market. And that's very telling. Despite a $278 billion wipeout, Bitcoin couldn't even break below $100,000. It's now less than 5% away from where it was on the day pre-crash. Meanwhile, Bitcoin's dominance surged to over 62% during the event. So investors are waking up to the reality that there's only one real asset here, and it's Bitcoin. Every flash crash like this reinforces that truth. As the scams and air tokens evaporate, Bitcoin's strength and credibility only grow. And remember, this isn't Bitcoin's first sell-off on tariff headlines. During the last tariff scare in April, Bitcoin dropped 13% in 4 days to $75,000 and then ripped 50% higher within 45 days. Heading into Q4, the setup looks eerily similar. Rate cuts are already happening, liquidity is expanding, risk appetite is returning as a result of that. And now, with leverage wiped out and spot demand back in control, Bitcoin is poised to climb from a much stronger base. The market just gave us a clean slate. When $278 billion gets erased in under an hour and the market shrugs it off and rebounds, that's a clear sign of strength. A clear sign that investors are more than willing to purchase Bitcoin at this price, and they want it to move higher. Bitcoin's fair value is still widely misunderstood. If parity with gold is your benchmark, then we're talking more than a 10x move from here. And if its fair value is all of the world's speculative monetary capital, the potential is several orders of magnitude higher. So yes, the crash was violent, but now you know why it happened and why it was necessary. The over-leveraged froth has been burned off, and now we climb. That's all for today's video. Thanks so much for watching. If you enjoyed, make sure to like and follow for more and reshare so more people can see this, and check out Horizon. Horizon lets you buy Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. You can check that out and learn more by visiting joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thanks again for watching. I'll talk to you soon.